Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec, on Friday the 28th of August. There is a risk positive line running through markets today. What we've seen is there was a lot of volatility in the wake of that big, really important speech by Fed Chair Jerome Powell yesterday. He laid out the path for the Federal Reserve to accept an average inflation targeting method of going towards its mandated 2% target on inflation. Also aspects of the unemployment mandate as well. But the inflation targeting measure was the main focus. And certainly that means that inflation can run above the 2% target for some time in order to allow the average inflation to come back towards the 2% mark. And that would suggest that the Federal Reserve is going to remain lower for longer or looser for longer on monetary policy. So what we have seen is that aside from volatility yesterday, we've seen that the dollar has started to fall back again quite strongly. And interestingly, yields have been climbing. A yield curve steepener, as you can see with the yield spreads widening between the 2s and the 10s. That is because the shorter end of the curve, which is the rates end, that is held flat, but the treasury yields at the longer end, i.e. the 10-year here, are rising on inflation expectations. So subsequently we see the yield curve steepener, but that is a risk positive move, but also dollar negative. So that's the inference that we've seen there through markets, and we can get that gauge through the fact that US futures are up again, continuing to climb on that E-minis contract there, and a little bit mixed actually on the European side. They were up earlier, a little bit sort of shading, a little bit mixed at the moment, but broadly speaking risk positive. And you can see also here gold starting to break higher again, and silver, and we are starting to certainly see the dollar underperformance across the board. You've seen a breakout on cable to multi-month highs. And also we're seeing that euro is pushing towards its resistance levels as well. So really strong moves that we've seen there. Now, other news overnight, we've seen the resignation, or the pending resignation of Prime Minister Shinzo Abe of Japan. Now that has strengthened the yen quite a lot actually in the last few hours, and sort of focuses on my chart of the day, which is sterling yen, but still I think that there is an interesting angle there on sterling yen to play out. But at the moment we are watching out for yen strengthening, but broadly speaking dollar weakness is the key play there. Now in terms of data points today, we've got US inflation on the agenda for the Fed's preferred inflation gauge, the core PCE, and that's at 130, and that's expected to improve to 1.2%. On a bounce back in July from 0.9%, so obviously still well under that 2% area that the Federal Reserve will be targeting. And into the afternoon, we've got the final Michigan sentiment, which is expected to be unrevised from 72.8. So that does take me to my chart of the day. Oh, just before we get into that, Governor Bailey of the Bank of England speaks at Jackson Hole today, so watch out for that, sterling traders. Now, sterling itself is part of our chart of the day, which is the sterling yen cross. Now what we've seen is a breakout yesterday on sterling yen, really important break. It's been buzzing underneath this resistance at 139.75 for the past couple of weeks, broke out on Wednesday, decisive upside break yesterday, continued high today, and then you got the news that Shinzo Abe was resigning, and that strengthened the yen quite significantly, dragged sterling yen lower. But I think this is going to be a chance to buy. Once this settles down, I see some good support in this 39.75 area to 40.20. Good breakout support in the last couple of days. You've got the uptrend that comes in at 38.75 today. You've got the rising 21-day moving average. What a cracking line of support that's been in the past 6 to 8 weeks. That comes in at just above 39, big figure. So this is coming back into a nice band of support. And if the market starts to develop that support once more, I think you can see that the sterling yen cross rate is likely to be rising still with these strengthening momentum indicators still. So I think weakness is going to be seen as a chance to buy. And as I said, nice band of support just underneath, initially 39.60 on the hourly chart. You can see that's a bit of a feature in the last couple of days, but it's coming back into the support now. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website, sign up for our webinars, and click to watch Trader Talks, our videos that give you top trading ideas.